Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 25th of January. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. This is a video for paying subscribers at ctmthebiggerpicture.substack.com. It's published on YouTube after a delay of a week. All right, great. Let's have a look at ES. Okay, we saw a recovery from the lows last week, but to be honest, it didn't really extend into the end of the week. We had an IHS which broke up. It did not make the target at 7,003. So what next? Well, looking across the indices, NQ is pretty muted as well. Dow, well, actually that kind of fell and broke the rising support from the early January low. So that looks interesting. So that could be a sign of further weakness coming, and actually I've got a lot more to say about this on the daily chart as I have. Sorry, that was RTY, this is YM, and that is, we again saw weakness on Friday, and more to say about that on the daily chart. In terms of DAX and STX, muted rallies as well. Gotta say, I'm thinking this looks a bit like a bull flag, but I am wondering if we're actually setting up for some more downside. We will see. Let's have a look at SPX. Okay, in terms of SPX, I was talking on the pre-market video on Friday about the fact that we had failed to break over the daily middle band, and on Friday at the close we had also failed to break over the daily middle band. In fact, instead of closing on the band, we closed very slightly below it. That was repeated on the Qs, because the Qs we had closed basically on the band again, almost exactly. And again, we closed slightly below it on Friday afternoon. What about Dia? Dia, actually, having almost retested the all-time high here, but not quite, came back and tested the daily middle band again. So we've got SPX and Qs have spent 3 days trying to break over the daily middle band and failing, and Dia has actually come back and tested it again. In terms of IWM, this didn't look too promising either, because this obviously we never got back to the daily middle band on Tuesday, but we saw a decent rally here, higher highs, and then we gave an awful lot of that back on Friday as well. I'm wondering if we're going to see some more downside at the beginning of next week. And I gotta say, if we are going to see more downside, next week's not a bad time to do it, because the first week of February tends to be pretty bullish. The last week of January tends to lean towards the bearish, and we do have one bullish day tomorrow which might deliver, and that's Monday, but the rest of the day leans, not strongly bearish, but certainly bearish. In terms of IWM, also the other thing I noticed was that on this move down, we had sell signals fixed on both the RSI 14 and the RSI 5. That was interesting, and it's all the more interesting because if we look back at Dia, we had a sell signal there which played out nicely. It's not an awful, we don't have a lot of sell signals here, but we still got an alley. I know we saw it, that made target, but we still got cause for concern here. So looking at ES, ES holding under the daily middle band as well. So I'm wondering about seeing some more downside. Now, I was talking about this possibility on Friday as well, and I was wondering whether we might be forming a bull flag. Likely it would be a bull flag, particularly looking at the Qs, but I was wondering whether potentially we might actually see a lower low here. Now, to be honest, it's been an eventful weekend. Obviously, this second US citizen got killed in Minneapolis, I think on Friday or Saturday, and I've been watching that, and I've watched the videos, and like the actually even more unambiguously than the Rene Good video, this latest one contradicts pretty much everything that the administration has said. Donald Trump, Stephen Miller, talking about terrorists and assassins and, attacks on ICE. And actually, that's perfectly obvious from the video that none of that is true. And obviously, a lot of things that politicians say aren't true. But you've got to remember, this is the way the BLM Black Lives Matter protest started. Guy gets killed. There's an official story. It's entirely contradicted by the video. The government tries to tough it out, and Suddenly you've got massive protests countrywide. We could see the same here, but also in the shorter term, it's energized the Democrats against ICE. They're rightly calling for ICE to be abolished, which frankly at this stage seemed like a good idea, and start a new agency for border control. It's because they just look like a bunch of masked goons being sent around Vance is now claiming he didn't say they had absolute immunity, but they're still behaving as though they do. So the Democrats are very anti. They've now said that they're not going to be voting for the bill on Friday. So there was always a possibility we might see a partial government shutdown at the end of January. And it looks very much at the moment as though we're going to see exactly that. And again, that's not great for business either. So there is significant cause for concern that we're going to see some weakness next week, and it might be quite a lot of weakness. Not a lot to say in terms of patterns and hourly signals. In terms of the cues, nothing really. But what I was talking about on here was if we were going to see more downside here, then this may be a bull flag forming, and we could come down, let's say 600. Theoretically, we can actually be forming a large bear flag and come down a lot lower. I'm not seeing much reason to think that at the moment. On the other hand, ICE murders another half dozen people, who can say? But certainly I'm wondering about weakness next week. In terms of we've got an RSI 14 buy signal fixed on the hourly on Dyer, but not an awful lot to suggest. I am wondering again, we've got, lower lows here. 496.19 has been, we got up to 496.07, then 496.916, then 496, and then 496.01. That's a lot of resistance at 496. And we've broken down from the original rising wedge, which is very nice. And that's the one from the November low, and we've got a beautiful rising wedge as well. There is an argument for obviously coming back into, it doesn't have to be now, but I think the next obvious big target within this wedge would be the wedge support, which is currently in the 480 area. So I'm wondering about that. All right, let's have a look at IWM in the shorter term. RSI 14 sell signal fixed on the hourly chart. Not a bad looking wedge if that's overthrown from the November low. I think that's November low. Yes, it is. And again, I'm wondering about a move to 255 there. So there is scope for a move down. And to be honest, it hasn't been a great weekend for the administration. On DAX, we're seeing some pullback, and we are failing to get over the daily middle band there too. On Nikkei, didn't reach the daily middle band, or at least almost reached it, but not quite. Next obvious target would be the bigger picture, but again, this could be forming a larger bear flag. I am overall on equities concerned about a move down next week. We shall see. All right, let's have a look at DX, and DX made the double top target, and it did a full retracement back to this low here. This actually has some fairly serious implications on the bigger picture charts. Let's have a quick look at the others first. All right, and let's have a look at the euro. We went back and retested this high. This could be a double top, but obviously this could be an opportunity to break higher. GBP USD, the double top had broken down, and that's failed now. So we have headed up to higher highs and broken up. So obviously these are overall looking fairly bullish. USD JPY was forming what looked like a flag, but we then had a big decline on Friday. USD CAD, big decline on Friday, big moves up on NZ and Australian dollar, and overall this is also telling pretty much the same story, which is that the dollar is weak. So let's have a look at that on the bigger picture, because this obviously has very big implications. And I have been mentioning that the administration has really not been doing anything to inspire confidence in the dollar, and so much in markets is about confidence. In terms of, we've still got a lovely bull flag here. We are now back at, where did we close? 97.46. We're now back at this main rising megaphone support, which has already been slightly penetrated once. Get down below this low at 96.22, and there's a pretty good chance that we're breaking down directly. And as I said, while the bull flag was suggesting we would go back to the high and then break down and double top, if we see a break against expectation, i.e. the bull flag breaks down instead of up, then the target for this, with this effectively becomes the topping pattern with a target at about the 80 area. All right, looking at the weekly chart on that, weak RSI 14 buy signal fixed, RSI 5 sell signal has reached the possible near miss target. But here on the daily chart, you can see we've got a double bottom here. And it's broken up with the target in the 104.10 area, and at the moment it's failing. And if we get back to 96.22, it's failed. We would have a possibility of a slightly larger looking double bottom here, but in terms of the overall sentiment towards the dollar, I'm getting concerned. I think this may well break down directly, and that could have big implications on quite a few things. It'll mess up, for starters, the nice looking bear flags I've got on EURUSD and GBP USD. But bigger picture, this could break euro back up to the next obvious resistance up in about the 2.55 area. On GBP USD, I've got a potential inverse head and shoulders neckline in about the 1.425 area, which I'll be watching, but that's a big resistance area. USD JPY, I'm still wondering about a possible test or retest of this high here at 162. People have been talking about reaching that with some alarm, but we will see. There's some interesting things happening in Japan here in terms of their bond yields and so on. But that was a pretty impressive decline on Friday. In terms of USD CAD, we've been trading in a range for 10 years. That's a long time to be trading in a range. Could this be a head and shoulders setting up a move down? Yeah, it could. And I might have I got that marked on any of these? Wait a second. I should really. But basically, this is the neckline here. And if it sort of break down, that would take us back into about the 1.225 area, I think. In terms of the Australian dollar, we've seen a breakup from this declining resistance trend line. At the moment, that is consolidating upwards. Do I have an overall reversal pattern here? Possibly a somewhat ugly large IHS. Maybe. NZUSD, we've got a triangle here, and if that we're almost at resistance now. If that sees a serious breakup, that's been forming for 5 years. If we can break up over this declining resistance, which is a very nice looking three-touch resistance trend line, and deliver a sustained break, then I've got a lovely looking potential level bottom here, which could get us a long way back up. So I am concerned that we might be starting a large and fairly historic decline on the dollar. Not that we haven't been as low as this on the dollar. I'm talking about it getting back to 80. But, you know, back in 2008, 2011, it was down to 70.7 here, 74.17, 72.7. These are significantly lower than anything I'm talking about here, but nonetheless, it would be a big move. And the dollar has not been that low for 15 years. All right, let's have a look at the ZB chart. Now, ZB, we're seeing a bit of a rally here, but I am thinking that we are probably going to be seeing more downside on this too. We've got open head and shoulders target down on ZB. We've got an open double top target down on ZN, and it's looking pretty nice. And we've got a short-term bear flag, it looks like. Let's have a look at that on the bigger picture chart. And all right, here on TYX, we've got a double bottom, which is broken up with a target at about the 50.1 area, and I'm not seeing anything compelling to suggest we won't make that target. In terms of TNX, we've got... This could be a double an IHS, but actually the real IHS is the one I've put in here. That's got a target in about the 43.5 area. And again, I'm not seeing anything to suggest that won't make target. This looks like a bull flag forming at the moment. TLT, we've got a head and shoulders, which is broken down with a target in the 84.7 area. And really, I'm thinking that's probably going to make target too. That also fits, because if the dollar's losing confidence, then to be honest, that's not really going to help bonds either. But the dollar at the moment looks as though maybe this at the start of a breakdown. And really, given what the administration's been doing over the last year, it's not at all surprising. There's a lot of faith in markets and currencies and etc. And he's not inspiring an awful lot of that at the moment. All right, in terms of CL, we've got a little double bottom here, which is broken up. Very deep retrace, but it's now pretty much made target. I've got that target in the 61.4 area, and we pretty much made that on Friday. Not quite, but almost. We've got a possible 60-minute sell signal brewing. I'm wondering about a reversal here. In terms of HO, this has been the strongest of the oils, and that's pretty obviously, it must be because of the cold snap. And that's why, that's the reason I think for what we've been seeing on NG as well. Nice looking rising channel here, waiting to see signs of weakness. Nothing compelling at the moment, but NG is looking pretty interesting, but I'll come to that in a moment. RBOB, possible double top here. We will see whether this extends higher, which it might. Now, this is interesting. Now, this is the NG February chart, and I rolled that into March today. And I don't think it hadn't rolled on Friday on the main index, but I mean, I think it's likely to do so very, very shortly. And we will see how that goes. But at the moment, bar chart's no longer showing the February contract. I don't know if it's expired, but I think it's certainly no longer seriously in play. So this, and you can see we've had this wild move up here from 3 to about 5.6, and it closed at about 5.4. And you can see that on the daily charts as well. And that is obviously using this number into Friday. But go and have a look at the March contract, and we see a very different picture. We've got the same falling wedge, but the rise only gets us just above. Instead of going all the way and getting back above this high here, this is actually come up only to 3. It came up from about 2.6 to 3.7. So it started really about 0.4 above. It tends to have big rolls, natural gas, between one futures contract and the next. But it started about 0.4 above, but then it actually ended about 2 above. Is that 5.5 it closed at? And this is 3.63. So this went up from basically 40 cents and ended up with a difference between the two contracts of $2. That is suggesting this is going to be temporary, and we're going to see some more retracement soon. And that this breakout is not as serious as it initially appears. We'll see how that feeds through over the next week, but this actually looks as though it might be topping out short term into a reversal. So we will see. All right, let's have a look at those on the big picture charts. And looking at natural gas, obviously we're seeing a close here in about the 5.5 area, so that is obviously taking it from the March contract. And I think, yeah, it's but I think we should see with a new contract a very, very sharp decline, because the March contract closed Friday here, and that is an awful lot lower. Other news, though, this pretty much made it to this open double bottom target that I had, and this kind of looks like a bear flag, but we will see. But this cold snap, I think, is the explanation for the wild move we saw. In terms of the weekly chart, no divergence. Daily chart, no divergence, but it would be easy to set up a daily RSI 5 sell signal now. We will see. All right, let's have a look at oil. Oil, obviously, we've got the big falling wedges. They broke up, they pulled back. And in terms of bottoming patterns here, we've got a very nice looking double bottom setup on WTIC, and I'm wondering if that might be starting the upward move on heating oil. We had an IHS which failed, and we've got another alternative, actually nicer probably IHS, given the right shoulder and left shoulder lows are so close together. If that breaks up, the target would be a little higher. That should get us all the way back up to the this high here, which would be this high here at 3.42. So I'm thinking we could be starting that. Natural gas, sorry, on gasoline, the falling wedge is breaking up slightly here. We've got a potential overall double bottom, slightly asymmetric, but really not bad. I'm wondering if these might all be on the way. So I'm going to write a post about that in the next 2 or 3 days. And I'll be talking about the possibility that we might see a very large move up next year, which will certainly be a surprise to Donald Trump, as he's forecasting a big decline in energy prices. I'm not convinced that's going to be the case. He might be right. But I'm going to be putting a theory that in the event that things go well at the moment, let's consider something here. We've got, at the moment in the market, there's about a $3 or $4 million surplus between what is being produced and what's being consumed, and that has been keeping prices relatively low. Russia has been supplying about 9 million barrels a day into that market, so obviously that's about double the level of that surplus. They've been an awful lot of that has been shipped around the world by the shadow fleet, which, as you'll notice, Trump's taken about 3 of those off. I think the Germans might have taken 1, and the French have taken 1. the shadow fleet is currently being picked off. That's something like 60% of Russia's oil sales that don't go through a pipeline. And I don't think there's an awful lot that is going through pipelines now. The main pipelines they had were to Europe, and they've pretty much been closed down now. So I'm just wondering whether we're going to find that Russia's finding extreme difficulty getting its oil to the market. And if that's the case, we might see several million barrels a day of oil come off the market. And if that's the case, then actually what is currently a surplus might well turn into a shortage. And the shortage is where we might see a squeeze, which could fuel a very large rally. We will see. But I have to say, in terms of the wars going around and the activity over the last year, there was unusually little activity in terms of oil spiking, which it tends to be pretty serious to big conflicts. I think that might be changing next year, so we will see. Certainly, it's a very nice looking bullish setup. Okay, let's have a look at gold. Gold, well, I was saying don't get in front of this one, and here we are. We're pretty much at 5,000. I am thinking that I'm now thinking it's starting to get more likely that we might see some retracement, partially because we're at some big round numbers, and that's not uncommon. I mean, for instance, the big high that lasted forever on silver, it seems, was in about the 50 area. So, and then we're up now on silver at 100. We're testing 5,000 on gold. We made it up to an amazing 103 on silver. The only one which, we made the target here on palladium, and we made the target here on platinum. So we pretty much made targets across the board. I'd quite like to see this high retested on palladium, I would say. And we haven't quite made that yet, but we're getting pretty close. In terms of negative divergence, I've actually got a possible 60-minute sell signal brewing here. For some reason, I hadn't marked that in. I've also got another one on GC, but I am starting to think that we might be getting pretty close to a larger retracement after this amazing move up. And it's not something, again, I'd be that keen on jumping in front of at the moment, but nonetheless, I think it might be coming. In terms of HG, we've got a lovely looking double top here, and it came down, tested support, and then didn't do anything. So just rallied halfway back. This still is a very nice looking double top setup, and we've got a weak 60-minute sell signal fixed. Let's see if we get some more downside action next week. If equities are going down, that will likely help. Okay, in terms of KC, oh, no, hang on, sorry, bigger picture charts. Let's have a look at those. Bear with me a moment. All right, gold. Gold, obviously, this has been an absolutely historic run. In terms of the short term, no current divergence on the daily chart, but we do have quite a lot of divergence on the weekly charts. We've got an RSI 5 sell signal fixed. We've got a possible RSI 14 sell signal brewing. In terms of this has been such an amazing run that it really hasn't given any room for negative divergence to form here. And the last sell signal we actually had that delivered was back in October when we were in the tail end, when we were forming this triangle here. So keeping an open mind, and it might be that we're not going to see a triangle until we get some negative divergence. I'll be watching out for that. In terms of silver, again, historic, amazing run. On the weekly chart, we got a possible weak RSI 14 sell signal brewing. We got a possible RSI 5 sell signal brewing. Daily chart, we got a possible RSI 14 sell signal brewing. Wondering about it. Again, I would be wary about getting in front of this. But again, this is partially about the weakness of the dollar, and partially the precious metals are going up because there is a lack of confidence in the dollar at the moment, and people are looking at it as an alternative that doesn't involve having a counterparty, which is one of the big attractions about dollar, of course. All right, looking at palladium, I've got here an IHS which is broken up with a target in the 2550 area. We haven't made that target yet, and I quite like it too. Doesn't necessarily mean it has to, but it's a nice target. We had a very similar one on platinum, which made target beautifully, and you can see that here. So that was peachy. Sounded pretty ambitious when I was calling it as a target when we broke up here, but well, here we are. All right, looking at copper. Copper, we're up pretty close to resistance. We've got an RSI 14 sell signal fixed on the daily. Do we have anything on the weekly chart? No, not really. but you can see we're hitting some long-term trendline resistance from, well, that goes back to 2006. So I am wondering about a significant retracement here. We will see. Looking at GDX, still got a lot of negative divergence on the weekly chart. I just drew this in today just because this megaphone here, if this was a bear flag, I'd have drawn this in years ago, but I was just drawing this in speculatively in terms of this move from here to here. We broke up from this falling megaphone, which would normally, of course, break down. And the target when you break up from one like that is up here. We've almost reached that now. I've got that at about 108. But in terms of the daily chart, tiny amount of negative divergence. I think these will come down when the others tail off, but there's not a lot of indication. We do have some short-term indication. We've got RSI 14 sell signal brewing here on the hourly chart, and we've got an RSI 5 sell signal fix, but that's pretty small beer. We've got nice weekly sell signals again brewing on GDXJ, which has obviously powered through this high, the previous all-time high here at 130.8. Daily chart, no divergence. Hourly chart, we got a bit, not a lot. So keeping an open mind on that, not saying there's anything strongly to say that we are about to turn, but I'm just wondering about it. Okay, looking at KC. KC, we're seeing a bit of a rally here, but I'm thinking we're likely to come back and retest this low here in about the 337 area. Sugar still looks like a bear flag for me. CC has continued down. Not too surprised about that. We do have a possible 6-minute buy signal break, and I'm wondering about a rally. Looking at CT, is this a bull flag? No, it's too big. But could be, and I don't really have an obvious support trend line here, but keeping an open mind, we do have a weak 6-minute buy signal fix. Looking at lumber, we broke up from this double bottom, and I'm still thinking that might make target. Retraced back below the double bottom resistance, though, at the moment on a sell signal, which is now made target. Looking at wheat, we had a double bottom break up here, very deep retracement. But I was saying I thought it might still have a shot, and it's trying to deliver that shot at the moment. This might just be a bear flag forming, but I'm quite liking it, and we will see whether it can get higher. This does have a target in the 546.5 to 549 area. Looking at corn, has gone a bit higher, still looks like a bear flag forming, but if we get up to 435, that will no longer be the case. Looking at soy, we've got a double bottom which is trying to break up towards the target in the 1104 area. We've got a weak 6-minute sell signal fixed, and we might see a bit of retracement. It could be that this is going to fail, but keeping an open mind at the moment. On ZL, we have continued higher, looks pretty good. No current negative divergence. In terms of live cattle, we have broken down from this double top, and that's showing absolutely no sign of making targets, and probably we're heading back up into a retest of this high. Looking at HE, very nice looking channel here. I'm watching to see what happens. I'm going to look at this again tomorrow morning, but I think we've actually, this weak 6-minute sell signal has now turned into a full 60-minute sell signal. So we will see. I'm looking to see whether we get a retracement back to this rising support trend line, which I've got currently at about the 92 area, maybe 92.2 or something. We will see. All right, great. Let's have a look at those on the bigger picture. Alrighty, now coffee. I have mentioned before that we're trading well above historical norms here. Now, obviously, this is affected by crops and this, that, and the other, but we've got a very nice looking level top here, and I think we might be about to start working our way to the downside here. Big target here at about 2.783, which is approximately the top of the old range that it broke out of, and I'm wondering if it might go lower. Am I thinking this is a double top that might make target? Nah, that would take us back to about 1.2, 1.3. We might get there, but I wouldn't be thinking that would be because of this pattern. In terms of the daily chart, no current divergence. With nice looking double top, we've seen a bit of a rally after it broke down, which isn't unusual, and I think we might be about to resume the downside. Looking at sugar, obviously we've got a big target down in the 9 area, which is the main thing I think about when I'm looking at this chart. Sell signals reached possible near miss target on the monthly. Unless we see a big rally before the end of the month. On the weekly chart, no current divergence. On the daily chart, meaningful divergence. I'm thinking that this is consolidating and we're probably going to head back and retest the lows. In terms of cocoa, I had mentioned also quite regularly that we are a long way out of, even further out of historical norms here, and I've been talking about this big break we had when we broke below 6427, and we are heading down. Am I thinking it's going to head down to these arrows? No, these are too big. This pattern is too big to be credible. So, but I'm thinking we may well head back and back test this range. We're actually near the top of this range. I don't know whether we'll go back fully into it, but if we did, we'd be heading down into about the, let's say, about the 2,000 to 3,000 area, and I wouldn't be surprised to see it return there. In terms of the daily charts, no current divergence. We will see. We did have a potential double bottom here. We are continuing down at the moment, and honestly, that's the way it should go. Wheat, we've seen a nice break up here. If it's got legs, then we've got legs probably to get up into about the 545 area, and we'll see. Do we have a very nice looking double bottom here, which broke up a while ago with the target in the 576 to 579 area? Yeah, we do. And I'd like to see that make target, because we've also got a huge double bottom here, which could potentially give us a very strong move up on wheat, although I'm not sure the fundamentals will support that. In terms of corn, corn got a beautiful double bottom here too, and this has been kicking around for a while, trying to break over the daily middle band at the moment. Well, weekly middle band rather. It's I'm rooting for it, but we will see. We had this wedge, it broke down on the daily. We could be forming a head and shoulders to go lower. But we have got an IHS, which at the moment has broken up with a target in 495 area. But one thing I mention regularly is that if we are going to see a full reversal back down, you will quite often see a head and shoulders form in the opposite direction, and we could have that forming here. All right, looking at soybeans. Soybeans, seeing a bit of a rally here, and we're temporarily back over the daily middle band, but bigger picture, well, I'm not sure the Chinese are buying. So I'm really not seeing a huge amount of optimism on the soybean market at the moment. We will see how that goes. But I'm thinking we may well just be seeing a bit of a rally and then continue down. On the daily chart, nice rally. We will see. In terms of the cotton chart, lovely looking double bottom here, which sometime, possibly while we are still alive, may well break up and give us a really decent rally. But to be honest, this has been, 6 months of trading sideways? That's a long time. In terms of lumber, lumber keeps not going down, but it's not really breaking up either. We're consolidating sideways again. This is a very bearish looking setup. We've got a bear flag, which has a target in the 352 area, and I've actually got a smaller double top, which is broken down with a target about the 352 area. So really, we got a double target down there, and sooner or later, I'm expecting it to resume the march down there, but it hasn't done that yet. All right, great. Let's have a look at crypto. And let's have a look at it now. Bear with me. Okay, in terms of what I was looking at here, was I was expecting a bear flag to form. That looked like a bearish overthrow. The bear flag's now broken down. I think we're heading back to the flag target, which is at 80.6k. In terms of Solana, I was talking about this being a double bottom, which I thought would break up, which it did, and then I was expecting it to fall, which it has. The target there is a return to 116.85, and we still have an open inverse head and shoulder, a head and shoulder target down and a retest this low here at 95.24. If we were to see an extended move down on Bitcoin, then I'd be thinking it would go through 80.6k and come back and retest this big level here down here at 74.4k. In terms of Ethereum, we've got a nice looking bear flag here as well. This was actually turned into a triangle. I drew some arrows on here, and we had a smaller, the arrows are, sort of idealized, but we saw the move down, we saw the bit of a rally for the partial wave E, and this is broken down. This should have a target down at a retest this low here at 26.21, and may well extend lower into this target here, which is a head and shoulder target here, which is in the 2050 area. I'm liking that target. That's looking pretty good. We will see how it goes. All right, great. In that case, that's a wrap. Everyone take care. I'll catch you guys again on Wednesday. Cheers.